Is it possible to make $100 a day trading cryptocurrency? Yes, it is. You can do that. It's definitely possible, but it's not as easy as you probably think it is. And unless you practice some key principles, then your fantasy of making $100 a day will quickly turn into a nightmare of losing $100 a day. This video is intended to help you get on the right side of this equation. Oh, and of course, I did want to point out as well that this video is about trading, but you can honestly just as easily apply this logic to investing in cryptocurrency as well. So there's definitely a lot of value here for investors. So if you're an investor, not a trader, do watch this, because really, what is an investor at the end of the day? Just really a trader that has a bigger time frame. So anyway, my name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild land of crypto. So if you are looking for a great exchange to trade cryptocurrency, Bitcoin, Ethereum, all that fun stuff on, then you should absolutely have an account over on Binance. It is the best exchange out there. It's got deep liquidity, a crazy amount of different altcoins to trade, lots of different trading features, different futures, margin, all that fun stuff that you might want as a trader, as well as other cool stuff like launch pools and be able to purchase Bitcoin using your local currency. Lots of different currencies are supported. And if you sign up using the link down below in the description, then you'll get a 10% trading fee discount. So go ahead and check that out. Now, on to the topic of making $100 a day trading. It definitely makes a great video title, doesn't it? But is it realistic? Well, the short answer, yes, it is realistic. It is possible to make $100 a day trading, or $10, or $1,000, or more. But that's not what happens to most traders. This is the dream, obviously, sitting at your computer in your pajamas, making the big bucks like a boss. But for the majority of traders, that is not what happens. They lose money. Lots of money. In fact, the right answer on how to trade Bitcoin or cryptocurrency, or even, stocks or whatever you might be trading, for most people, the answer is simple. Don't do it. The odds are massively against you. Something like 90% of traders lose like 90% of their trading account in the first 90 days. It's a brutal game. But even after learning those statistics, most people still want to trade. So let's not kid ourselves here. The allure of easy money is just too much to resist for most people. And trading Bitcoin, of course, is just the tip of the iceberg. Bitcoin's usually the slowest moving horse in the race. Altcoins can move way faster, way quicker, but it's not always in the direction you want it to go. Sometimes it goes down, way quicker, way faster. So what separates the traders who can consistently make money in the markets from the traders who consistently lose money in the markets? Most of it comes down to one simple factor: risk management. I know it's not super sexy, but it's true. So let's discuss some easy tips that you can start using today to dramatically increase your odds of being on the winning sides of trades and achieving that goal of hitting $100 a day. Or, $10 or whatever. Winning, not losing. That's the idea. So the first is position sizes. So let's say that your trading account's $10,000. That's your total trading account. Now, the way that most traders would approach trading is by putting their entire account into one trade. $10,000 on one trade. Yeah! If you nail that trade, you're gonna be rich. But if you lose this trade, you could suffer a loss worth thousands of dollars, which is, of course, detrimental to your trading account and also very demoralizing. It's a classic mistake, and one that leads to, I think, a lot of mistakes in your trading approach, because the fear of loss with such a big amount on the table can be very, very stressful. On any single trade, experienced traders will use only a few % of their trading account. So if you have a trade, for example, worth $500, In this situation, it's 5% of your account, and you lose 10% of that. Well, you only lost 0.5% of your entire trading account instead of 10% if you traded with the whole $10,000. That's a big difference. Very, very big difference. Well, it may not seem as exciting. Those small, consistent wins, they add up. In limiting your downside, make sure that you can go on to fight another day, which is very important. Survival is important. That leads me on to my next point. Always use a damn stop loss, guys. Seriously, trading without a stop loss is like skydiving without a parachute. It's true. Maybe you're gonna get lucky and you're gonna hit the ground just right and maybe only break an arm or something, but most of the time, splat. That's what's gonna happen. But most inexperienced traders, they don't use stop losses, or they do use stop losses, but they don't do it right. They set their stop loss out of fear, not out of a rational decision, deciding something like, okay, I'm only going to risk 7% on this trade, but where's that 7% come from? It's just a fear-based number. Instead, you need to look at the charts and make a rational decision based on what you see in the charts. Let's say, for example, that in this example, we've got something like the nearest line of support is at 8.5% down. Then you probably want to set your stop loss around 9.5 or even like 10%. This will cover you against a test of that line of support. That's why, of course, we don't want to set it at 8.5% because you get that test and then you get washed out on the test and then it bounces back up. If the support fails, well, then you get out before things get too bad. But your fear-based 7%, that was eaten up a long time ago. It comes back down, tests, bounces, goes up 20%. You're like, what happened? You lost. That's what happened. So you can't set it out of fear, guys, because in so many situations, support will hold. That's why it's support. And you took a loss simply because you were afraid to set the stop at 10%, which based on your trade would have been the right move in this, fantasy situation. So always set your stop losses in such a way that if that stop loss is triggered, then it means that your thesis behind the trade failed. You lost support, the pattern broke down, whatever it might be. And if that means you need to set your stop loss at something like 15 or 20%, then that's what you have to do. And if that sounds scary, then you have two options. Option number one, walk away. This trade is not for you. Go look for another one. Be patient. There'll be more opportunities. Number two, lower your position size. So instead of making like a $500 trade, just make a $100 trade. It's much lower stress. You lose 20% of $100. Only $20, guys. Not that big of an impact on your trading account. Using a stop loss is going to help you cut out those losing trades before they get too bad without taking a big hit on your portfolio. But they also fulfill one other super important function. They allow you to lock in profits while letting your winning trade run. So if your trade, let's say it's up 50%, now you can close it out at 50%, or you can let it keep running if you think it's going to keep running. So if you let it keep running, then what you want to do, you want to move your stop loss into profit. For example, let's say that we have a good support level around 35%. So you move your stop loss up to like 34%. Now, no matter what happens, you're going to make 34% on this trade. You have won this trade. And if the asset keeps going up, you can keep moving your stop loss up and up and up, following the trade, locking in your profits. So that's a great way to use it. Now, the next bit of risk management is about trading on leverage. If you're new, then you should only be trading on spot markets until you get the hang of things. But when you do start leverage trading, and you will at some point, right? You're all going to play that game at some point. When you do start leverage trading, you have to apply both the previous rules, stop losses and position sizes, plus a new rule. Keep the leverage low. Many of these platforms out there, they offer you like 100x leverage. Don't do that. Don't play that game. That means you can trade with 100 times your money, but it also dramatically increases your risk of losing everything. Just because you walk into a bar and you can buy 100 shots of tequila doesn't mean that you should. Keep it low. Get 2 or 3 shots. Use low leverage. Most of the big traders, they rarely use more than 5x leverage when trading on leverage. If you decide to trade on leverage, and it's not for beginners, then you should have very, very strict risk management in play. The next piece of advice, do not overtrade. You do not have to make 10 trades a day to be profitable. It's not necessary. You can even just make a few trades a month and do really, really well. Sometimes you won't even have a trade in a month. You're just waiting for the right setups. Many people think that they have to be trading all the time, be in the market all the time. But actually, over trading, psychologically difficult, can wear you down really quickly too if you keep hitting the loss after loss after loss. You kind of stop seeing the forest from the trees, and it's so easy to start making mistakes in that situation, which leads to revenge trading, trying to make up your losses because you get loss after loss after loss, and you just lose more with revenge trading. And before you know it, your trading account is on zero, putting you in that 90% of people who don't win. Just wait for the trades to come to you. Patience is key when trading. Do not be like that dog chasing every car in the street. You run a high risk of getting splattered. You need to be smart. Sit, relax, wait for the mailman to come to you. It may not be as thrilling as chasing those cars, but your chances of sinking your teeth into something juicy, they increase dramatically. And the final tip for you is to be careful of yourself. Your number one enemy when trading is without a doubt you. It's true. Fear is going to lead you to setting a bad stop loss. Anger is going to lead you into revenge trading. FOMO will convince you to enter a trade that doesn't fit your criteria or to buy that thing that's just pumped 1,000% or whatever it is. Greed will prevent you from taking profits. And definitely don't drink and trade. Don't do it. Don't do it. Bad idea. Seriously. Don't do it. And if you're in a bad frame of mind just generally in life, like you're depressed or you're going through some really difficult life moment, don't trade. Just stay out of it. You don't have to. Trades are always there. But protecting your capital, that is incredibly important. Your capital is not always there, and it's really hard to recover from a loss when losing your capital. So please stay out of the market if you're not ready for it. The markets will always be here for you. There will always be new trading opportunities. A fatal mistake also that many traders make, following the herd. When an asset's pumping and everyone's getting into the trade, well, surely you should be too. Everyone else is doing it, right? It's the new hot thing. Don't miss out. Buy it now. It's not good. It's not good. Don't do that. In trading, you kind of need to learn how to be a bit emotionless, kind of think a bit in a contrarian sense. Usually, the best time to enter a trade is when everyone else is kind of afraid, like, oh, well, that stuff's dead and it's a bad time and whatever. That's probably a good time to enter the trade when there's a lot of fear in an asset. The best time to exit a trade and to take profits is when everyone is super greedy. Most people do the opposite. They buy in the times of greed and they sell in the times of fear, and that's why most people lose. Anyway, those are some practical tips for you. I didn't even touch on things like how to spot a breakout, using moving averages, what candles mean, RSI, MACD, volume, all those other really essential tools that a trader needs. So if you don't know any of that stuff I just talked about, then you need to actually educate yourself on trading before going anywhere near trading. And if you still need help with all that stuff, then I've actually made a trading course for beginners. So there's a link down below where you can check that out as well if you do need some help learning actually the ropes, the basic ropes of how to trade. Anyway, your question for today: what has been the number one thing that has made you a better crypto trader? Let everyone know down below in the comments section. Thank you so much for watching today's video. Long live the blockchain, and peace out till next time.